Hi, thanks for stopping by. In today's video, you're going to hear my friend Jim, who taught statistics at a local university, talk about the risk-reward opportunity with Bitconnect. But first of all, just a brief introduction for those of you who might not be familiar with cryptocurrencies. Cryptocurrencies have been around since 2008. They're a $338 billion industry. That's real dollars right now. And what cryptocurrencies do is they solve a problem. In the past, if you thought about currencies, you thought about the Japanese yen, the US dollar, the Canadian dollar. Well, think of cryptocurrencies as solving different problems. And what things like Bitcoin solve is international trade. On the one hand, you might look at it as decentralized banking, where it's not contingent upon the Federal Reserve or anybody or a group of people getting together to manipulate the money up or down. It's what we have is called paper money or fiat money. We believe the government will honor its debts. Well, cryptocurrencies are backed by lines of code, 100,000 or more lines of code, and in a blockchain that's virtually unbreakable. And so the second part of it is, if you're not into the Federal Reserve part of it and the democratization of money, you would be interested in lower fees. So for instance, I could send money to my son-in-law over in the Ukraine, and it would be there relatively quickly at no fees, as opposed to a day or two or with $14–15 worth of fees. That's going to open up a whole world of different things that come our way. For instance, micro articles and just almost unimaginable things. The other thing to know about cryptocurrencies, especially Bitcoin, is it's finite in number. There's only going to be 21 million of these made. So after that, this isn't tulips in the Middle Ages that people got crazy over and then the market collapsed. This is a finite value. So that's another reason that I got into it. People like Richard Branson say that one Bitcoin's going to eventually be worth $500,000. Maybe, maybe not. I'm not an investment person, so I'm only going to share with you with what I've done and how I looked at the risk reward, and Jim's going to explain it here in a second. To me, it's worth it. Other people have said that cryptocurrencies are going to be bigger than the internet, that roughly this is about where we're at 1995 with the internet, that this is the beginning stages, and it's only going to get bigger and better. So with that in mind, here's Jim. Like I said, Jim taught statistics at a local university. He's going to share two things. He's going to share what the potential is in Bitconnect based off the last 12 months. Bitconnect's been around 13–14 months. Bitcoin been about 8 years. So what you would do in this process is you would buy your Bitcoin, you would transfer it over to Bitconnect, you would exchange it for a Bitconnect coin, and then loan it to the company, and they have a trading bot that trades for you. And here's where the magic comes in. You receive daily interest on your loan to them, and a loan can be X number of days. It varies depending on how much you loan them. But in the past 12 months, it's averaged just a hair under 1% for 12 months. And it is compounded daily. This is not simple interest, it's daily compound interest. So by the end of 2 years, you're really taking off if you keep reinvesting the money. And again, I'm not an investment person. I've only put in what I could afford to lose on this. Jim's going to describe the risk reward, but for me, at my age, this is for people who have more time than money. If you've got enough money, you might want to buy a Bitcoin, but most people don't have $13,000, $14,000, $15,000 right now laying around to do it, even though you can buy fractions of Bitcoins. If you can, I suggest you do that too. But if you've got more time than money, perhaps Bitconnect is for you. So without further ado, here's Jim.
Hello, this is Bitcom Jim, and I'm a former professor of statistics, quantitative management courses at a college level, and a friend of mine asked me to look at this, and I was rather impressed with the results. And if you invest $1,000 or invest $100, and first I would preface and say no one should invest anything that they cannot afford to lose, that they're not going to be taking food off the table or medicine from their mother or whatever else it might be. This should not be anything that is going to jeopardize your lifestyle. However, if you do have extra cash, and if you were so inclined to diversify your investments, obviously we're not getting any type of return from the banks or certificates of deposits. Mutual funds, done well, but nothing compared to what this program is that as I've seen. Starting out with just a simple investment, a minimum investment they have, as I understand, is $100, and it pays a rate of interest at 0.9% a day, not quite 1%, but this is paid over the last 1 year has been actual there. So if you invested $100 and it earned 0.9% a year, at the end of 2 years' time, that $100 will, if you notice at the bottom here, will turn into $65,000. At which time it is paying $593 a day. So if you could live off of $593 a day, in 2 years' time, your $100 will generate $65,000. Paying at 1% a day is going to be $593 per day. That would come out to be, bottom right corner here, $214,000 per year. Now, what it really gets interesting to find is that if you put in $1,000, what does that do? Well, first of all, it's going to increase your return quite dramatically. And this is contingent upon reinvesting your money each time it pays out, you're going to reinvest it back into the program. So what happens now is that, number one, you're going to make a lot more money. So let's take a quick look at that. So going down at the end of 2 years' time, that $1,000 now turns into $683,000, which then is going to be paying $6,000 a day in interest, or $2 million a year. $6,156 times 365 days is $2 million a year. But what also happens is, so you know, remember the $683,000, 683. What happens if you get to the $1,000 level though? This rate of return now goes, they give you an extra 0.1%. So this 0.9%, it's not 1%, it's not 90%, it's not 9%, it is 0.9%, which is less than 1%. But by investing $1,000, they give you an extra bonus of 1/10%, which makes the 1/10% plus 0.9%, that makes it at 1%. Now this extra 1/10% now becomes $1.4 million. I just jumped from $683,000 without that extra 1%. So the incentive, as I see it there, they're offering that 1/10% is virtually going to double your return in a matter of 2 years' time. That's incredible there. Now that gives you $14,000 a day or $5 million a year. This is going to put you in that top 1% of the wealthy people in this country then, huh? Now, it's all based upon probabilities, okay? And one of the areas of statistics is dealing with the likelihood, the probability of something happening. Now, if I were to invest $1,000 and I had 0% chance of making, this thing's going to go belly up and I'm not going to make any money on it, I'd be foolish to invest $1,000 in it, okay? But what if, and I don't know that this is 100% certain, I really have no way of knowing who's behind it, what they're doing, how it works, how long it's going to work, or anything else, but I'm looking then at what's the likelihood. I'm going to look at my expected rate of return, and my expected rate of return compared to what my risk is a calibration to say if I expect to make X number of dollars, if I expect to make $1,000, I'm going to break even, okay? But let's say this has a 50-50 chance of panning out and doing what we're saying it's going to do. Just a 50-50 chance. So I take the probability of making money, which is 50%. 50% of the time it goes belly up and I don't make anything, but what's my probability and what's my expected rate of return? Well, 50% of my rate of return then is 1.4 million times 50%, or that's $703,000. So my expected return is $700,000 versus my risk, which is $1,000. Statistically, am I willing to risk $1,000 to make $700,000? That sounds like a pretty good deal. I'd take that bet. But let's look at another level. Let's say it only has a 10% chance of producing this kind of results. I'm only going to chance out of one out of 10. Probability now is 10% times the 1.4 million. That is then $140,000. My risk is $1,000 to make a $140,000 return at the end of 2 years' time. That would say I'm only going to make $1,400 a day or $500,000 a year. So my calculated risk would say I'm going to risk $1,000 to make $140,000. To me, that is still a good bet. You know, I can't do these odds in Las Vegas or any casino. I'm not going to do these with the stock market, with mutual funds, with CDs, definitely, and so on. Huh? But not even if we look at an extreme situation. What if the probability is only 1%? I've got just one chance, 99 out of 100 times, I'm going to risk $1,000 and lose it all. But that one time that I do it, I'm going to make $1.4 million. So I take my probability of 1% times 1.4 million, and I get $14,000. So just with the probability of 1%, my return is my $1,000 is going to return me $14,000. Okay, this is my analysis. It's based upon the fact that they have been paying over the past year 0.9% return on investment. Is this going to continue for the next year? Could it go higher? It's based upon, I guess, the Bitcoin, the volatility, however the program and what the investing bots are and so on as to how this works. I have no privy to what the black box is behind this. And I am just entirely basing this upon statistical history and the evidence that is presented by Bitconnect and their rate of return. It's an opportunity, I feel. Okay, from my statistical analysis, wrapping this up and then a brief summary there, I'm just analyzing. I see that this is paying on the past year 0.9%. Will that continue for the next year, for the next 2 years? I don't know. Just understand, the probabilities. Even if it drops to 0.8 to 0.5, there's still a good deal of money to be made. I'm comparing this to the CD rates, or the average what the stock market has done in the past year. The risk involved is minimal. The other thing which I find attractive about this is the fact that I don't have to trade the Bitcoins. I don't have to look at the market every day. I can see how much I've made, and it's when I check in once, twice a day as to what the daily payout is. Some day it's 0.9, some day it's 0.23, some day it's 1.5. But on the average over the past year, it has been 0.9%, and it may go up, may go down based upon the volatility of the Bitcoin. So that's my conclusion.
What do you write to it like mail?
No, a lot of people use it and communicate with. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?